Hi, we're looking at Eurostoxx 50, and this is around lunchtime where things have slowed down a little bit. I'm entering a short trade, and then I realize that we're entering a bit of a range. So I just want to see where the temporary area of value will develop so that I can try and nab a few ticks here and there, shorting the high and buying the low and getting a few ticks here and there. So I'm replaying this 10 times faster. I think I've entered 3 or 4 trades in total. And these ranges can last anywhere between 10 minutes and an hour, but eventually they do break out. This is nice because it's quite clean, and you can see on the right hand of the tab you have the split profile, and that gives you, I've reset it just before this entered into a range, so this is gonna give us a nice and clean cut idea of where the range starts and stops. So again, we see that it trades between 89 and 93, where at 93 there has been one extension of the original 92. Here it tries to push higher and it fails again, so I fit it. And it's gonna go back at 89. We see there's no contracts, 0 contracts traded at 88. It means that whoever is selling has no intention of pushing it for the moment lower than 89. And now this is normal speed, and I've slowed it down because there's something that happens if you look at there you go. If you look at the book on the bid, you see that 89, 88, 87, 86 have been stacked. So usually when there's a flip or a game, only a few prices will be stacked. I mean, sometimes just one. That's a nice indication that the level is being played. Here, however, we have multiple prices and there is a corresponding buying pressure. It starts slowly. It starts at 90 where you have 300 contracts bought. So I enter at 91 thinking, well, the worst case scenario is that this pulls and I'm out at the bottom of the range with a couple of ticks. Best case, this could be the time that it breaks higher. And you can see that the book is being replenished, going higher and higher. Now we've replenished 91. There's 1,700 contracts, and there's no indication of the bids pulling just yet. So we're heading higher for the outer part of the range. See at 92 still we're stacking. We buy out 93 with 400, 500 contracts almost, and the level gets replenished. So we're trying to go for the high. And here I'm now thinking, where should I put, this is possibly the time that it breaks, where should I put my limit order to exit? We're very close to 3,500, which is a bit of a magical number. People like round numbers, and it's a bit of a watershed. If it goes higher, we'll continue trending higher. If it doesn't, we'll probably go lower. So here's the push higher. We buy at 95. It gets absorbed and then countered with 1,500 contracts at 94. The bids don't pull quite yet, but I'm not sure anymore that this is the times that we take it higher. So the bid retracts, then goes back higher again, this time with less conviction on the market orders side. You see that we're slacking a little bit with contracts. We're buying 94, buying 93 again, and then buying 94 again. We try to replenish that level, but there isn't that big push. Here levels get stacked again, so I think, well, I'm not gonna exit quite yet. Let's give it a little a little longer. But there's nobody buying a 95. They're just not hitting the level, just 8 contracts there. They're pulling 94. One less push up. And now most of the bids have disappeared. So there's only one level at 92 and it's just 1,000 contracts. So the original premise for the trade was exhausted. I thought this was a slam, so they pull it and then they push it back up higher. But I tried it a couple of times, and now in hindsight, I should have gotten out right now. This is the time where momentum has faded, has ended, and as this was a scalp, I should have gotten out. There you go, some more resistance at 91, 92, or should I say support, as it's on the part of the buyers. It's going lower and lower on very little contracts, really. There's not much selling pressure, but I just want to get out, and I got out at break even, as the original premise for the trade was now void. And now you can see there's a lot that gets pulled on the bid side of the book. So people are not so sure anymore that this is going to go higher. So let's see what happens next. This is a bit slow, so I've sped it up. It hangs at the newly found center, and then it breaks lower. So now it's officially broken that 89 price that used to hold, that has held for so many touches. There are in fact 1, 2, 3, at least 4 touches that I can count. Then what happens is that it pulls back up to 92 and it tests that high volume area, can we call it, because there's a step in the profile between 92 and 94. So that 93, if we want the market to go lower, that 93 should hold. So in this range we've probed 2-3 times higher. We found not much interest at all. There was some, but it was absorbed by the sellers. And now we've put a move down, a retest of the area I, and so now we should be going down, and this is what happens. We put 800 contracts down at 90. When it trades there, then it pulls back a little bit, and then I'm going to continue letting it roll, because in a moment the range is going to break out. Let's see when that happens. Big buyers coming in at 89 and 88. So this could have been a symmetrical range extension as it happened on the high side. So it would happen on the lower side, and then price should revert back to the middle before trying to break out again. So if you want to call it a double head fake. But in this case, when price pulls back, we see 1,000 contracts absorbed at 89, see the offer at 89 is very small. You have 7,100 contracts but being refreshed, and you have 1,000 contracts that have been absorbed at that level. Then they sell 400, 500 contracts at 88. And this is what sends the market over to the other side. Range is now officially broken. The bid is not refreshing. So I decide, okay, well, this is good for a scalp. I want to go short. Should have waited for a bit more confirmation. Should have waited for at least a pullback that we're getting now. Now this is a liquidity vacuum we've pushed down. We haven't had time to refresh those levels at 86 and 87, and it pushes back higher. Fortunately, the buyers stopped buying at 88 with a mere 50 contracts, and we pick it back at 87. And here it ranges a little bit. So yeah, not a very good entry. A better entry would have been 88, based on the fact that we had built all of that volume between 89 and 93 really, because the probe high we're not counting. So if we want to go short, the best scenario would be to have 88, 89 holding, then going short at 88. This is where the volume profile helps you. With the general volume profile that has been rolling since the open, you wouldn't have seen that. But if you're fast enough to realize that there's a range developing and you clear the split profile will give you an idea of where the countries are traded and where countries are not traded. So you would have seen that 88, 89 level on your split profile. Split profile is right there on the right hand side. You have a red column and a blue column, and it gives you the split of the contracts, the contracts that have traded at the bid and at the offer. So what we've seen today is two things: a range, or what we called an area of temporary value, where we have scalped and faded the edges. And then we've seen a poorly executed, admittedly, pullback trade that exploited a liquidity vacuum. So the market moved lower, then it didn't have time to replenish all those levels that it broke on the way down, and it pulled back. Behind the pullback was not much conviction from the buyers, and when the buyers eventually realized that, hey, we're counter trend trading, and the sellers stepped back in, then we had a nice fast move down, recovering what was before and a little more. Anyway, this was fun. I hope this has helped someone. Thanks for watching. I'll see you next time.